Now you're talking, and that would get me excited. You could have a really super year next year.
Gary Black just explained to investors how would Tesla stock break out of this current range and maybe go up well above $200. Let's dive in.
So to me, the two big catalysts for the stock, if you're thinking about, do you want to get out of it here because estimates are going down? You got two big catalysts coming in the next 12 months. You got Cybertruck, which will be, Elon saying that the handoff to the delivery team is end of third quarter. That's when the big delivery event will be. And then they start really scaling it up next year. And then you got the $25,000 vehicle. Both of those are going to increase TAM, total addressable market. If you go back to that chart they showed at Investor Day, where they showed all the pictures and the different segments, and you look at the size of the segment, nobody could really figure out the numbers till after the fact. They put size of the segment in it. The TAM on that, we'll call it the under $30,000 segment. So is that with the car that was covered?
Yeah.
That was about 48% when you take that number, divide it by the other number, the sum of the other numbers. And the pickup segment is about 20%, right? So you got a huge TAM increase coming because of Cybertruck, whether you like it or
pickup and
not.
van. Yeah.
Gary Black is talking about this slide from the Investor Day. So this is about 48% and this is about 20%. But keep in mind that this includes large SUVs as well.
And yeah, and the $30,000, $25,000 to $30,000 vehicle, which by the way, it doesn't have to be just a compact. It could be a cheap SUV, a baby SUV. It could be, as you said, it could be a hatchback. It could be a sedan. It could be anything that's using this next generation manufacturing process to cut costs in half. That's kind of the next leg of this.
I think it is, of course, very important to make sure that we cover every single segment, but we also have to be careful not to get ourselves carried away with too many models. While that may help short term, long term, that would increase the costs, therefore preventing Tesla from scaling further.
The Cybertruck, to me, it's my favorite of all the vehicles. I think it's very distinct look, and whether you like it or not, it will drive people into the store, or it'll drive people to the website. They'll see it, they'll say, wow, that's really cool. What is it? They'll recognize the Tesla logo on the back, and they'll go on the website and they'll look at it, whether or not they're going to buy it or not.
One of the best ways for Tesla to advertise right now would be just to get the Cybertruck out as fast as possible. Once that hits the roads, it will be a wow factor, and maybe it would even make sense to get 50 or 100 of these prototypes out there just on the roads driving every single day. Maybe sell them to people at a much higher price, although that may be a bad idea if all of the, let's say, software things have not been worked out, or if there are some weird features or things that you have to deal with still. Because think about this. Let's say there's a bug in the software, the camera software, where it shows you exactly where the wheels are, and then someone backs into their garage and hits the house actually, and because it's a Cybertruck, the whole house collapses, not the Cybertruck. The Cybertruck would be fine, but still, would that be good advertising or bad advertising?
And my partner and I were talking about my forecast for next year, and my volume number is pretty high because I've got both the Cybertruck hitting, and I've got some number of Model 2s hitting later in the year, and that could really, to your point, move the stock, because you're going to have volume growth probably in excess of the kind of 35% number that people are gravitating to this year. And to your point, if you've got Model Y and Model 3 priced appropriately, or at least competitively, you could have a really super year next year if you've got both of those coming out.
Most of Wall Street is still seriously not getting a simple thing that I could explain to a 7-year-old, and that 7-year-old would outsmart most of Wall Street. Now, Gary Black is getting this though. But in 2017, Tesla did launch Model 3 in the middle of 2017. They started production, but you didn't really see any results that same year. And we can say the same about Cybertruck for this year. But the next year, bam, the production more than doubled in total for the whole company. And then when did the Model Y launch? Well, the production started in early 2020, but you didn't really see massive gains in 2020, but you did see production again about doubling in 2021. When is the Cybertruck launching? This year. So for 2023, I don't expect really that many more deliveries, but 2024 I do, and 2025 especially, because next year, likely the next generation vehicle is going to be launching, and next year we won't really see many deliveries from that yet. But in 2025, with the next generation vehicle ramping really fast, as well as the Cybertruck, I think we will have a crazy big year. And most of Wall Street will be wondering, why is this happening? How can we be so wrong over and over and over again? Shout out to Gary. He is doing better than Wall Street. Certainly, he understands that there will be some serious growth.
I'm very excited about it. I think it's a huge catalyst. I think once it's out there, again, whether you like it or not, it'll drive people to the Tesla store. It'll drive people to the Tesla website, and maybe they'll buy something else.
Like a Model Y, for example, especially if the prices just keep falling and falling and falling. Although in the short term, I don't think the Model Y is likely to have more price cuts in the US, at least it is in blue. The inventory is falling after the last price cut, but the Model 3, yeah, if it stays here or goes up even more, I would expect another price cut. Certainly also a price cut for Model X vehicles is expected. The Model S for now, we'll see.
It's an attention getter, and I can't wait to get mine. I've got a tri-motor. I don't know what it's going to be priced at, but I've got a tri-motor, and I can't wait to drive it through Chicago and park it at the valet, and let people want to take pictures of the thing. I mean, that's the way it's going to be.
Yeah, I'm with Gary on this one. Look at that Cybertruck. Looks amazing.
Yeah, I have a brick and mortar office here, and I'm tempted to like park it in front of not even in the parking lot that's in the back. I'm tempted to park it in the front and just like see if I can clear it with the
Put a camera on there on the outside and just watch it. You'll see all these people coming up and take selfies.
I have been following Gary Black for a while. I haven't seen him this genuinely happy and excited in a long time. Look at his eyes and his face. He's excited. Me too, but I'm a pretty happy guy already anyway.
I was trying to think of what would make the stock start moving, because it's stuck here at 165-ish. So it's Cybertruck, it's getting the $25,000 vehicle out quicker, maybe making it in China, we'll call it that.
Actually, based on this 1-month-old rumor, roughly, we know that Tesla is planning to probably build about 1 million small Model Ys in China, 1 million in Giga Berlin, and then 2 million in Mexico. So I wouldn't say it's a maybe that Tesla will make it in China. No. Tesla is planning to make it in China, I think, most likely. It is just that it will make more of these in Mexico.
It's Elon saying we're not going to take any more price cuts, which he said the opposite last night, but that would be helpful. If they started advertising or hired like a CMO, a high profile CMO, I think that'd be helpful. If they hired a Twitter CEO, which is what I heard down in Florida, the single best way to get advertisers back on Twitter is to get a CEO, because it's not that they don't like Elon, he just doesn't believe in advertising, right? So that's an inconsistency. And then the last is a buyback. And I put buyback last because it's kind of like icing on the cake for me. Buyback, they're not going to do enough that's going to move the needle, but symbolically, at least you're putting a floor on the stock that when it's getting hammered, like on a day like today, the company could be in buying back its stock. So I think those 5 or 6 things could make the stock do better than what you've seen over the last couple months.
Out of all of these things that Gary just mentioned, the one that I would really want to happen is Elon appointing someone else as the CEO of Twitter, because then Elon would probably spend more time at Tesla. Advertising, we can argue how much value does that create right now versus long term, but Elon spending more time at Tesla, I think that is pretty tangible value for Tesla. And in this most recent interview on April 18th, Elon did make it very clear that Twitter is so close to actually being profitable.
I don't mind them producing more than they deliver a little bit, but if production keeps exceeding deliveries by 20, 30,000 every quarter, then you're going to keep having this discounting problem.
I don't really think that discounting is a problem. Now, for many Tesla stock investors, it is because they care about short-term Tesla stock movements. 6 months, 12 months, 18 months from now, if you care about that, it is a big problem for you. But if you are investing into Tesla stock with a time frame of about 5 to 10 years or more, this doesn't change how effective the next generation vehicle is going to be, how effective Cybertruck is going to be, and how well Tesla Model 3 and Y eventually will be selling. Sure, it's a problem for now, and that certainly is reflected in the stock price currently. But just for a moment, let's entertain the idea that Tesla would actually advertise eventually. If advertising does work, the moment you turn it on, it will start working. Doesn't matter when you turn it on, and the later you turn it on, really, the more effective it is going to be. Reason number one is the vehicles would be cheaper. The lower the price is, the more effective advertising will be at selling these vehicles. But also, because right now, at least certainly in the US, this is the case. If you are buying an EV, more than 50% of the people are buying a Tesla. So if you advertise, you are mostly advertising to people that are not going to buy an EV right now, and you're trying to convert that customer to an EV buyer. Now, in other places in the world where Tesla's market share is a lot lower than 50%, that's where it would make more sense to advertise and say, oh yeah, this other EV is a piece of you know what. Tesla, on the other side, is a piece of marvelous technology.
When Elon says we're trying to drive affordability and that's we're taking prices down, I just shake my head. I say, that's not what is going on. What's going on is you got too much, because you can see it every time the inventory starts moving up, and there are people who track inventory off the websites, and the inventories are like almost as high as they were in early January before they cut price. Troy Tesla does a great job tracking order backlog in days and the wait time. Those are below where they were in January. You know there's going to be price cuts. It's happened every time.
I like Gary a lot because he understands both the retail Tesla stock investors and also Wall Street, but he is more on the Wall Street side. You look at the Model Y inventory, and it has been steadily increasing since about here. And what happened around here? Suddenly, it's decreasing very predictably. It's almost as if the vehicles got more affordable, and now more people are buying them, which is, by the way, exactly what happened. And if you look at the Model 3 inventory, it's almost like Tesla lost part of the EV tax credit right here. And then inventory did go up by quite a bit, although Tesla did cut the price for the Model 3 as well, although not enough to offset the loss of the tax credit.
Elon as much said it last night on the call. He said, hey, look, we look at the orders every day, you know. Remember he said that last night on the conference call? Every day we're looking at the orders. Well, you know that's what's driving the way they price. And I don't buy that it's about affordability. When you're taking the price of a Model Y down from $54,900 to $52,900 now to $49,900, is that really driving affordability with the type of person buying a Model Y? People like you, people like me, I own a Model Y Performance, right? Is that really going to drive affordability? No.
If you have a lot of money, yeah, sure, it won't matter much. But let's remember that most of Tesla's customers come from Toyotas and Hondas, and then some from BMW and Mercedes. And by the way, as Tesla gets bigger and bigger and bigger, more and more people will be coming from brands like Honda and Toyota, and less people will be switching from brands like BMW and Mercedes, just because Tesla will be selling so many more vehicles, and there are only so many people that buy BMWs, Audis, Mercedeses, Lexuses. There are a whole lot more people that buy Hondas, Toyotas, Volkswagens, Nissans, and all these other cheaper vehicles. So yes, if you sell a vehicle that's $55,000, now all of a sudden it's $49,000, and you are switching from a $30,000 Honda, to you, that looks a whole lot more affordable. Yes, it does. But Gary does have a valid point in that the moment the inventory builds up or the backlog goes away, Tesla does cut prices. Yes, to clear out the inventory. That's no secret.
Where affordability and elasticity really become important is down at that $25,000, $30,000 level. So if you bring out a car like that, where you're leveraging the Tesla name because young people want a Tesla, and if you could make it comparable in cost to a Toyota Camry, you know, with operating costs more like a Toyota Corolla, and you throw $7,500 credit on it, Now you're talking, and that would get me excited if I'm a Wall Street investor.
Gary does have a pretty good point here. If you look at the revenue based on MSRP that each price point generates globally, not in the US, globally, you will see that most of the price elasticity is somewhere between $35,000 and $15,000 in the US. I would imagine that would be pushed a little bit more towards the left, but still the point does remain. And the Model Y, if you include the EV tax credit of $7,500, it is pretty close to that price point where we should see lower prices being a lot more effective.
At that $25,000, $30,000 level, and that would get me excited if I'm a Wall Street investor. The problem is they're so far delayed on this. They should have been working on this the last 2 years, and now we're hearing, okay, we got this. Here's a question for you. We got this Mexico plant that'll be ready mid-2024, let's call it June of 2024. Why not get this product out in China where you need it today? Why not do that in China? China opened up a whole factory in 9 months. Why not, get space near Shanghai or, maybe adjacent to Shanghai and get this thing up and running now so that you can get this product at least out in China? Why not do that? I'm asking you. I don't understand that. Why do you have to wait for this Mexico plant?
Yeah, I certainly would have preferred that Tesla somehow was able to get that next generation vehicle out faster. That would have been nice. Bradford thinks that in China, maybe the government asked for a lot more money for the land because Giga Shanghai is doing so well. So yeah, pay up. But also we know that Tesla Giga Shanghai plant expansion saw delays because of Starlink and the government over there not really liking what Elon Musk is doing overall. So yeah. But also, we do know that Tesla has been working on this next factory for about a year already. So how better could how Tesla really done here? Remember that about a year ago, we were going through some crazy supply chain shocks still. Would it have made sense to maybe have a few more problems internally due to supply chains, but do have some more human resources on the next generation vehicle and future factories? Would that have really been a better decision? Maybe. Maybe not. It is more important to look at the future and not at the past. Going forward, I think we are well positioned for the next 3 to 5 years currently. And this is an important message to all Tesla stock investors. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.